This meeting is being recorded.
All right, so we will call this meeting to order at 6:04 p.m. This board has a land acknowledgement and anti-racism statement that we have written in support, and it is posted on the board's website. Roll call tonight. I think everybody is present. We have amend a couple things on the agenda tonight. So I make a motion to amend the agenda to remove the consent agenda, to move property owner comments behind our closed session, to adjust our closed session to be for personnel and legal, and to remove the UDR hazard tree request.
Second.
So the reason for those issues is the minutes were not sent out to the board in a timely manner, and they were not correct to be sent at the last minute. The closed session is being moved up because we have our legal counsel with us and we don't want to keep him waiting. And the hazard tree request does not have any proper documentation to go with it. Keith?
Hi, AJ. I was wondering if I could get added to the agenda a confirmation on an ACC applicant.
No,
Your ACC has to approve the member at your meeting to bring them forward.
Yes, yeah, she's been approved.
when did you have a meeting?
We had it via email. We held it via email.
You can't hold a meeting via email like that.
Okay, we agreed to do that, but if you're saying we can't, that's fine.
Yeah, you have to notice meetings.
Tiny?
I just wanted to add with the agenda item that we talked about last night to discuss moving from Zoom meetings to in-person meetings.
Oh yeah, sorry, I forgot about that.
No worries.
So also a friendly amendment to the amended agenda to add 7D to new business, transitioning to, or discussion of transitioning to in-person meetings. All those in favor? Or any other discussion, I guess? All in favor, all right. Let's go.
Aye.
All right, that passes. So item 2 has been removed, so we'll move to announcements. Any announcements?
Well, I guess I should have said it during discussion, but just to be clear, I'm not the cause of the minutes not being posted. Since we're going to go into closed session and everybody will have time to talk, I did not cause that.
And you have your GM deal tomorrow, right?
I do.
Could you let our audience know?
Oh, yeah, sure. So just so people know that I'm holding another Ask the GM tomorrow at the same time, 7 o'clock. Well, at 7 o'clock, not at 6. From 7 to about 7:45. Longer if there's more interest and people have more questions. I'll keep going until you're done.
Sam?
The link for that can be found on the Sudden Valley website.
Oh, yeah, sorry. Thank you.
Josh, you're really quiet, by the way.
Sorry, I updated my computer and nothing's working. So I'm using an external microphone here and.
Okay.
Old school.
No worries. Sam, you got an announcement?
Your hands up.
Your hands up. I'm assuming that means you don't. All right.
Hey, wait, one last thing. I'm totally sorry, but we have Clean Green again this weekend, right? April 2nd, between 9 a.m. and 4 p.m. and that's across from gate 5 at the overflow parking lot. So you got branches and all that good stuff. Bring it.
Bring them down.
Oh, thank you. Any other announcements? All right, hearing none. Do we have a motion to move into closed session?
Motion to move to close.
Move into closed session. Sorry.
Timey, you can second that if you want.
Okay, I second it.
All right, all those in favor?
Aye.
All right, we'll see you over there.
Okay, I don't recognize Jeremy Galvin.
Hi, Jeremy.
Hi, Sam.
Telling you, you came up as Andrew Shedler.
Recorded.
Oh, dang it. I'm using his link.
I'll fix that.
John will have to, sorry, I didn't.
AJ's getting 2 votes again.
We're at the same house. We didn't tell anybody.
Yeah, right.
You're all kinds of people, Sonia.
I'm impressed at how many people have stuck it out this whole time. It's almost 7 o'clock in Hawaii.
Ooh.
So we're not really late. We're just in the wrong
All
time. zone.
right, let's do this. Do we have a motion to move back into open session?
Motion to move back into open session.
Second.
Back in.
All those in favor?
Aye.
Aye.
All right, no actions being taken as a result of closed session, but we did have the board was meeting with legal counsel to do some board orientation. And we were concluding our discussions on the ops manager, deputy GM interviews that we've been conducting the last few days. And we will be looking to extend an offer package to the chosen candidate. And we'll make an announcement when all of that becomes official, and that person begins employment with Sudden Valley. So move into property owner comments then.
Yeah, we have 11 people still here with us. So if anybody would like to jump in, just use raise hand in Zoom. Should be down towards the bottom of the screen or in the menu section of your app. And I'll bring you over to the meeting for property owners' comments. And I got juked.
My kids use that term. That's funny.
Here we go. Well, Linda, I'm going to go ahead and bring you on over here. And you can unmute when you're ready.
So hi, everybody. I stuck it all out, although I did get to watch Survivor and watch that all the way through and have a couple of really good Wordle games, let me tell you. The reason I guess I'm here is I have followed all of the policy for doing an information request. I sent an email to the board finally on 3/14, and I'd like to know between the board and the general manager why I have had no response to this request. Even if you tell me it's rejected, it requires a response.
So I can actually answer part of it. So there's a new law that talks about what you can release and what you can't release as far as those information requests, and your requests weren't falling within that. And so we're waiting for feedback as far as if we can do that. Yeah,
So exactly
how much variation?
So what
do we
law
have?
are you referring to, please? Would you please cite that?
The new Nonprofit Act.
Okay.
It has some very specifics about information requests and what you can and can't give out. And yours, there was a question about it actually not falling within that. So we're trying to get clarity on it.
But it's a record of the association. If I ask for the GL, that's a record of the association.
Well, the finances are posted. So there seemed to be some debate about that. It talks about finances, the financial records have been released, but the general ledger actually does reveal, it has members' names on there. And so it would cause the accounting team to have to go in there and redact that. And because there's an issue about exposing members' personal information.
I'll go ahead and look at it. Once again, it requires a response.
Well, I don't have anything to do with that part of it. I'm just telling you what's going on, but we're going to
But
find
I'm
out.
saying somebody should be issuing me a response. That's all. That's the point I'm making. And that's
We'll
make
get
sure
you a
to issue-
response, Linda.
Yeah, 3 weeks and a day late and $1 short.
So we'll get you a response.
Then the other thing I have a question about is from the meeting before this where the December finances were put out. And I had hoped if I got to look at the GL, I could answer my own questions. But if I look at the December 2021 balance sheet, our fixed assets, rather than appreciating, depreciated by over $655,000. Why? Normally that doesn't happen if you look back to prior years.
Linda, I wouldn't be able to answer that question for you without the information in front of me.
Yes.
But if you are going to be able to hang out a little bit longer, I believe Joel will be here with presenting our January financials, and he may be able to access that information and answer your question.
Yeah, it's just in trying to look back and look at a full year that you looked at. And I had hoped if I looked at general ledger, I'd understand it, because things just don't match up. If you go back another whole year to December of 2020, it's like if you take that finishing number and the other one, it comes to like over $800,000. And I don't understand what's going on, because normally our fixed assets at least appreciate a little bit, if not a lot. They certainly don't decrease by that wide of a margin. And I just wondered what was different. But anyway, if you'll have him answer that when he comes on, I'll have no problem with that.
Can't guarantee you that he can give you that information on the spot. He may need to take some time to review it, but you know, we can have Joel get back to you on it too if he can't answer it tonight.
I'm not gonna hold my breath. Thanks though, guys.
All right, thank you, Linda. I'll go ahead and return you to the attendees here.
Thank you, Linda.
I wouldn't recommend anyone holding their breath, just for the record. It's not good for your health.
All right, next, anybody else for property owners' comments? Just go ahead and use raise hand in Zoom. No need to hold your breath. We can bring you over right away. That may be it for now. We do have another session of property owners' comments at the end of the meeting if we're all still awake at that point.
Yep. All right, let's move forward. Next item on the agenda is our new business. And first up is some golf course capital requests. So I'll pass it over to the management team. Looks like Jeremy might be presenting for us.
Yeah, well, good evening, everybody. And yeah, so in 2022, we budgeted for $130,000 for capital expenditures, which was 4 walk mowers at $15,000 each and a fairway mower at $70,000. Due to higher costs and delays, I decided to look into some other options as far as to save the community some money. I was able to, my former employer had 4 walk mowers that were slightly used at about a quarter of their lifespan, in very great condition. And he was willing to sell me those for a total of $10,000, so $2,500 each. And then our current mowers are currently 20 years old, continually need pieces of equipment, are just lacking in technology, and we're continuing to have to put money into them. And then, so with the fairway mower though, I found out that with delays in shipping and everything with the flow of just the shipping delays and delays in production, that we wouldn't even, costs would be up and we wouldn't even be receiving things till late in the quarter of 2022 or even in the early 2023. So I also found out from the mower companies that prices are going to be going up. If you don't order now, you're looking at a year delay and also 15% increase in cost. So I was luckily able to get a quote and get them to commit to the quote for the fairway mower of $77,995, which is higher than our anticipated $70,000. But if we were to wait, that price would increase approximately, $10,000 if we were to wait. But with that, also knowing that prices were going to be more expensive and we were going to be also waiting, and that also waiting on equipment, with equipment being old, specifically our sprayer and our fairway mower, there's going to be more repairs, and with more repairs, that's added costs. So then on top of the added repair costs that would potentially happen, we'd also be incurring a 15% increase in cost. So I looked into finding a sprayer, and there was a sprayer budgeted for 2023, and that was for $54,000. But our sprayer happens to be one that we can actually just replace the tank and the spraying mechanism, not the whole driving vehicle that the tank goes on. So I was able to get quoted a price of $19,550 for that piece of equipment. And so I feel like if we go with getting the walk mowers, the 4 walk mowers at $10,000, which would be saving us $50,000 from the previous quote, which has gone up exponentially. I believe a new quote for 4 walk mowers now is $80,000. And also with the ferry mower and the delays, I felt it prudent to try and get the sprayer body and the ferry mower and the walk mowers. So saving us delays and 15% increase. If we order the sprayer and mower now, it'll save us just under $15,000 over 2023 pricing, $14,700 exactly. So if we were to, instead of purchasing the new walk mowers, we'll be able to acquire a new piece of equipment, an additional piece of equipment, and spend $13,000 less than what we had budgeted for the 2022 capital expenditures. So I propose that we get those 4 walk mowers from my previous employer, Waverly Country Club, and order the sprayer and fairway mower to save delays and significant increase in cost and repairs going forward. And I guess if you have any, I don't know the next process, but I can, in the finance committee, I know we opened up for each capital request, but that wasn't really I can't lead that, so.
Is it possible that we just do them all, AJ? Okay, now you can.
Sam has a question.
Sam has his hand up.
On mute. Sorry, I didn't realize I was on mute. I think we can do the motion separately, but we can maybe just have discussion, before we put motions on the table necessarily. People can ask questions, and we could, go ahead, Sam.
Jeremy, would you please elaborate why those walk behinds are a good deal and how that came about and what you know about how they became available?
Sure. Well, I mean, initially they were quoted for $15,000 when Jake, my predecessor, had budgeted the capital expenditures. So we're saving $12,500 on the previous quote, and now they're up to about $20,000, and that's even with not even including a 15% increase. Also, the golf course that I worked at, they're 2014 mowers, but they've had very little life on them, and have been maintained very well. Waverly Country Club, if you don't know about it, is one of the most prestigious golf country clubs on the West Coast, and has a great history. And the mechanic, when I was there, was there for 45 years and cared deeply about the equipment. And my former employer and Brian Koffler also is very dedicated, and just they care about their equipment. So I feel like it's a very good, and it'll last us a long time, and also save us quite a bit of money going forward.
We had a discussion and you were very clear about why those mowers were set aside at such low hours. And so I want everybody to be clear that they changed the whole story, the process, what they're doing. So these mowers were set aside for a while because of what you had described to that. So if you'd elaborate on that a little bit, just give everybody a better breakdown, because you did that very thoroughly when I had a discussion with you.
I'm sorry, Sam. I don't know if it was on my end or your end, but I that a lot of that didn't get through.
Let me try
Sorry.
again.
Yeah.
You did explain to me. I want everybody to know that those machines were not utilized because of a change in their mower procedures and different equipment that they acquired. And so I wanted you to elaborate, because
Sure.
they are used machines. And so if you break it down like you did for me, it's like it would help everyone.
Okay. Yeah. So initially in 2014, 2015, approximately, my former employer, Brian Koffler, bought 8 walk mowers because at these high-end golf clubs, when you have large staffing, you can be more precise with your mowing, and you need approximately 2 sets of mowers. So you could have 4 people go out and walk mow all the putting greens. All the putting greens are usually mowed at between 1/10 and 1/8 of an inch cutting height. So very, very short grass. But what happened was, with staffing issues and also technology becoming, us as turf managers have found that you can actually get consistent and quality putting conditions and turf quality with what is called a triplex mower. So it has 3 cut-in units on it, and only 1 employee needs to use that machine. So instead of 4 employees using to cut all the greens in the morning, you only need 1 employee. So he felt it was a good idea, and a lot of top-end clubs have gone to this as well. My other employer before that, Broadmoor Golf Club in Seattle, they also have gone to less walk mowing because they're finding they can utilize staffing better. So those mowers kind of had been, I wouldn't say they were just sitting around, but they were getting used less and less for various tasks, whether it was a green that was needed a little bit more care, or there's certain mowing practices that are just easier to do walk mowing, because your vision's better than on a bigger piece of equipment. So he only needs 4 of those walk mowers. He had 8 in total. He's still using the 4 that he decided to keep on a regular basis, and they're working fine. But he had 4 that he wasn't using, and I saw a chance to capitalize on those mowers that were in really good shape and could really benefit Sudden Valley Golf Club and the community, because we can save a lot of money. I hope that clarifies everything.
Thank you.
Yeah, no problem.
Keith?
Sorry about that, was a mistake. I was trying to give the thumbs up sign.
Thank you.
Ryan?
Jeremy, that was a really nice presentation. Thank you for your thoroughness.
Thank you. I appreciate it.
Does anybody have any other questions regarding the capital requests?
All
right, let me pull it up here so I don't misstate a motion. So we got 3 different motions we'll go through. We have our walk mowers, we have a fairway mower, and then we have the sprayer. So for the walk mowers, it would be, I move that the board of directors approve sorry, I move that the board of directors approve $10,870 for the purchase of 4 used 2014 Toro Flex 2100 walk mowers from the surf fund.
Second.
Does anybody want to further discuss the walk mowers?
AJ, I don't, it's not a big deal, but in the finance committee, we discussed because of potential travel, that it would be no more than 12,000. I don't expect us to need to go to that. I just don't know if that needs to be clarified in the minutes and things like that, just in case we did go over that with needing to pick up the mowers. I know that during the finance committee, I just thought I'd bring it up.
Joel, can you read it the way it was read at the finance committee? Can you read the motion as approved by the finance committee?
I don't know if I have that motion like handy, meaning exactly how they said it at the finance committee.
Well, what happened is it was modified at the finance committee, so I don't know that it was
Yeah,
ever,
it should have come forward to the board
revised.
that way.
Yeah, I don't know that it was
well,
ever revised to,
So was it 12,000 is what the number ended up settling on?
It was to be no more than 12,000, but I mean, I don't feel like we're gonna go over. I mean, I would doubt that we'd go over 11,000. I just wanted to make sure that as far as clarification, so everything's open and honest.
He has to go pick up the mowers, so it was to cover the cost of travel and gas and everything is where that extra number came in.
I
And
think it
transport.
read it was not to exceed 12,000.
Yeah, exactly.
But yeah, it would have been nice if that were reflected in what was posted for the board.
Okay, let's just.
I don't know if actually what got posted to the board meeting was actually what came through from the finance committee to the actual agenda itself.
Yeah. I guess we could just do a friendly amendment if no one has any objections to change the dollar value to up to 12,000 to include travel costs or we'll call it shipping costs basically.
Or delivery. Mhm.
Yeah. Does anybody have any objections to that friendly amendment? All right. We will consider that the motion then. So the motion on the table would be that the board of directors approve up to $12,000 to cover the purchase and delivery / shipment of 4 used 2014 Toro Flex 2100 walk mowers from the surf fund.
I'll give that a friendly second.
All right, we'll call the question then. All those in favor?
Aye.
All right. That passes. Moving on to, is that the only one then that we're dealing with that type of issue?
Exactly. Yeah, everything else will be delivered by the manufacturer.
Okay. All right, so the fairway mower then would be, I move that the board of directors approve $84,702.57 for the purchase of a John Deere 7500A fairway mower from the surf fund.
Second.
Any discussion on the fairway mower? All right, we'll call the question as the motion was just stated. All those in favor?
Aye.
All right. And the last one would be for the sprayer. I move that the board of directors approve $21,231.30 for the purchase of a 2022 John Deere HD 300 Select Sprayer from the SURF fund.
Second.
Any discussion on that? All right, we'll call the question. All those in favor?
Aye.
All right, that is approved unanimously. All right, thank you, Jeremy, for your presentation. That was great. And thank you for looking for some ways to save the association some money.
No problem. Thank you guys so much.
Thanks. Good
Thanks.
night.
All right. Thank you guys. Have a good night.
Thank you, you as well.
Thanks for waiting so late for us.
Thanks, Jeremy.
Yeah, no problem. Thank you
Yeah,
guys.
thanks, Jamie. Good job.
All right, so we did remove the hazard tree request as we're missing some documentation related to that. So we'll have to bring that forward at a different meeting. So I will pass it over to Joel for the financials. Or I guess I usually pass to Kim and then to Joel.
Yes, thank you, AJ. Joel, are you ready to share our January financials?
Yes, I guess I'm unmuted.
Also, Joel, were you here when Linda asked her question, or were you not at your computer?
Oh, no, actually, I wasn't.
Okay.
What was the question?
Yeah, I'm gonna be perfectly honest. I don't remember.
Oh.
I don't remember. It had to do with depreciation.
Appreciation.
I think it maybe would
December
be most
2021.
productive maybe if Linda would oblige us and send an email to Joel regarding her question.
Yeah, we do allow emails at our finances or finance committee at suddenvalley.com. That emails there are helpful because it gives Joel the time to look things up.
Yeah,
But if it's obvious, what she's asking is why is the depreciation dollar amount different? So if you know why it's, I don't have it in front of me either. So
Yeah, she said it was a huge amount this year, like $653,000 depreciation compared to normally every year it goes up a little bit in the Sudden Valley assets.
okay.
but if you don't know, it's
But
okay.
yeah,
if you
I
don't-
mean, that was it. It wasn't very specific, but
yeah.
Good recall though, Keith.
yeah, it's about all I can remember, right? My wife would be surprised I remembered that.
Oh,
Thank you,
I'll,
John. Finance Committee at suddenvalley.com is our email for questions. So why don't we move forward with the January?
yeah. So let's see here. Okay, so I'll quickly go through this since I know it's really late at this point. But the good thing is we're doing January, so it has the least amount of data of all the financial statements of the year. So now with January, probably the biggest item that you'll notice is kind of in this category. There's the PPP loan liability. Obviously, that's gone since it's just not on the books anymore. And at the end of that was paid off in around September of 2021. So that's why it's not in the December 31, 2021 column, and obviously not in the January 31, 2022 column as well. Now, turns like a big difference, but I'm going to talk about this when I go to the next page, would be these two categories right here. We see capital reserve holding cash fund. So we had about 1.157 million at the end of December 2021. And then you'll see it zeroed out. And now we have this 1.164 million that's now called SURF Capital Reserve Holding Cash Fund. And I'll talk about that once, actually, when I go to the next page right now, actually, or when I go to the cash page. I'll just go ahead and focus on this income statement for now. Now, the good thing for the income, okay, so we have, I'll just get to the bottom line, the net income right here. So we're sitting at about, real close to about 106,000 at the end of, this is, now, if you look at the current month to date versus year to date, these numbers are going to be exactly the same since we only have 1 month, but I could have just maybe on this statement just collapse this and call it year to date, but I left this just in case there was any confusion. So so the numbers are going to be the same. That's the good thing about January. So we only have one set of numbers to talk about. But like I said, the net income real close to about 106,000 at the end of January 2021. In terms of like year over year differences, at the end of January 2020, we were about 155,476. So we're basically in the ballpark of where we were last time or last year at this time. Now, the important thing, I think, the best kind of highlight about this would be our collection rate. So we're at 90.8%. Of course, now keep in mind that we budgeted for a 93% collection rate for the year. So once we get to the end of 2022. Now, even though this rate is lower than that at 90.8% January, it is always historically the lowest collection rate of the month. So for example, the reason why this is, even though it's less than 93%, why it's good is, you know, in terms of in relation, January 2020 was 86.5%. And then keep in mind, we still ended the year, January 2020 at year to date at 96.8%. So
January 2021, Joel?
no, actually, I'll do 2021 next, but I'm just going
Okay.
back a couple years. So,
Okay.
so January, so just keep in mind, January 2020, we were 86.5%, but then we ended out the year at, excuse me, at 95.5% collection rate. And then January 2021, we were 86.7%, and then we still ended out that year at 96.8%. So here we are at January 2022, we're actually higher than where we were at January 2020 and 2021. So 90.8% collection rate is a really good, healthy collection rate for January, since January is typically our lowest collection rate of the year. And then it steadily builds up from there until we get to the end of the year. And like I said, now we budgeted for 93% collection rate for every percentage that we come in over that. So let's just say we came in at 94% at the end of the year, 2022, then that equates to about another 22,000 additional revenue that's contributing to the bottom line for every 1% for operations. So for operations, about another, so if we came in at 95%, that'd be approximately another $44,000 that, you know, would pad our bottom line for net income. Now, I'm just going to go to the next page for the cash sheet. So probably the biggest change that you'll see, obviously, on this sheet, you know, I always talk about this every month. So the biggest items, surf, roads, mailboxes, you know, what your dues really go for in terms of the capital portion of the dues. All of these amounts are, and this is just going to be a function of what we have coming in terms of the dues that we're receiving. And the biggest, you know, thing to focus on would be the obligated expenses right here. So this is everything that the board has approved. This removes closed projects as well for 2020. So what you're looking at would just be what we're still kind of essentially the last remaining, or the billings left over for approved type projects for capital projects. So and then we have this board recommended carryover balance 600,000, which then gives us, you know, what we're projecting to be the net usable cash at the end of the year, 2.7 million. You have other things building into this, like outlook of dues at 93%. And now this number could go up, you know, if we come in at over 93% at the end of the year, which, you know, so far you could say it's very safe to say we're tracking that so far. Now you'll see another big line item here, or a big number here, the mitigation release. So this is being released from mitigation assignment of savings, 128,641, and it's now back into the SURF line item for that. It's actually this assignment of savings, local water or local Wacom Water Sewer District assignment of savings that was released from the county. That went back into SURF. Now it was always our money to begin with, meaning it was held in another assignment of savings account at one of our banks. So now it's just, we've got the formal release letter that now we can use it for whatever we want. Basically, it's now back into SURF. It's unreleased. Now the big line items here would be the capital reserve holding fund, these two columns right here. And there's that 1.157 million. That's the balance at the end of 12/31/2021. And so now this is what the board talked about back in October. Part of that resolution was we were then going to take these funds, then move it out of this capital reserve holding fund and then into a SURF fund. So now what I've done, just to keep things straightforward, is basically it's been moved out of a capital reserve holding fund into one of the SURF funds, but it's being tracked here separately in this column. And then you'll notice down here, I've got this, I called it obligated expenses / holdings. So basically, we're basically saying that this is kind of a set aside amount. We can't bank on being able to spend all this, because once we start doing a capital reserve transfer refund program, once that kicks in and people start getting refunds, it will, in a sense, it will come from this balance. So we'll start to drag down that balance. So for now, we'll just basically, just to be conservative, just assume that it's kind of all held, set aside, so to speak, almost like a mitigation assignment of savings in a sense. So it's not contributing to our overall net usable cash at this point. Now, those would be the biggest highlights of the cash of the capital reserve funds. Over here, we have the emergency ops funds, UDR funds, which is basically showing you what's usable in a sense. These are obligated from UDR right now. And then I'll skip over current month because it's the exact same thing as year-to-date month, the exact same numbers, since year-to-date is only 1 month, January. But basically what you're looking at for here is it's the exact same income statement level, but now it's displayed on a departmental standpoint. So that 105,869 for net operations. If I went back to net income, of course, I've done this in the past. There's that number right there, the net income number 105,869. But the handy thing about this sheet is this is showing you what department is responsible for what, basically, what department, how it contributes to that. Then you have a couple categories like, we're worse than budget. Basically, the only two right here would be HCC security, and then what's contributing to that largely is hazardous tree removal and maintenance over budget. For the year to date, month to date, both 53,225. That's all largely weather related type expenses as well from those storms. If we hit on golf, since I do talk about golf right here, so for year to date, month to date, same thing, since this is January 2022. So actual revenue for golf, 173,495. Last year they had 185,149. Now, one reason why this number, you might think, well, this number looks why is that so high in January? Now, the reason why the January number is high, and this is how it's just been done historically, so I've elected to leave it this way so it's comparable, is Brian, when he takes in prepaid golf dues for people, which he does at October, November, December, then those amounts get set aside into like a liability account, and then it all basically just gets for January 2022, then it just gets recognized and dumped into January. Now, auditors really don't care about this because what they're going to audit is the entire, when they do audit the year 2022, they're not auditing January, they're auditing the entire year. So it doesn't make a difference in terms of for the entire year, but to leave it like this actually does allow it to be comparable from year to year. So like, for example, they did have 185,149 showing up in January 2021, as opposed to January 2022. So it looks like it's fairly similar, decrease of about 11,654. Total expenses, which is just these actual salary benefits right here, amount for golf, actual other salary expenses right here. So it's just a combination of that plus this gives you 51,963 total expenses. Last year they had about 46,344. So it's an increase of about, approximately $5,600 in expenses. Net income for the end of January, 121,532. Last year they had about 138,805. So net income is about 17,273 lower, but it's basically within the ballpark. So we're tracking fairly similar to where we were in January for the most part. And I guess that would be basically the biggest highlight of the financial statements. Now, Linda brought up a question about the total depreciation expense. I'd have to go back and look at what the year's depreciation expense was. But this is just a function of the fixed assets that we close out. Once an asset is done and deemed closed, then I close it out, put it on the books. And at the time that we close it, that's when we start depreciating the asset. So the depreciation expense will increase as we start to add more assets. But then again, older assets can become fully depreciated and then stop depreciating, meaning they're fully depreciated and they won't contribute anymore. But this is just literally a component of the assets that we bring onto the books, and then when they're actually technically closed out, and then once we start depreciating them altogether. I'm not quite sure if she's talking about January or December fully, but another thing for December too, if she is talking about December can be a little nebulous because fixed assets have not been, those don't technically really get closed out. Probably might be a month or so before we get around to closing out fixed assets, and then depreciation expense starts to get fine-tuned, like to really match what happened with the assets throughout the year. However, the good thing about that is it won't affect our overall operating budget cash amounts. But I would say those are basically the big highlights of the financial statements, if anyone had any question about these.
I don't hear any questions or see any raised hands, so I will say thank you, Joel, for your time and for the lateness of the hour. I appreciate you staying up to review the finances for our community.
Oh yeah, sure. Actually, who I was just talking to a second ago was security, who stopped by and wanted to alarm the building, actually.
Make sure you're okay.
Yeah.
Thank you, Joel. We'll hand the meeting back over to AJ.
Okay, thank you.
You're muted, AJ.
Sorry. Moving down to the reserve study item, Joel has brought forward 3 different reserve study consultants for us to consider. I think each proposal is included in the packet. And it looks like he is looking for the board to discuss which consultant we think we would like to proceed with. And then we can make a motion accordingly. So at this point, I guess I would maybe open the floor to see if certain board members had any specific thoughts on each of the proposals. And what would be, yeah, I think we just maybe start there, and then we can go from there. Sonia and then Kim.
So are any of these reserve study specialists current or former CAI lobbyists or presidents? Just want to make sure that we don't vote for somebody we have to like stop and kick them off again like last year. So that's actually a serious question.
And, unfortunately, I think every single one of them are. So I'm just kidding. Yeah, not that I know of. I actually talked to all 3 of these companies. So I had like a good conversation with every single one of them. And I didn't specifically ask that question actually, but none of them said that they were. None of them even said anything remotely like pointing me to think that they were. I guess I could say it that way.
So who do you recommend?
Well, like all three of these companies are actually, I think all three of them would actually do a pretty good job. Now they have, they have their individual benefits. Like, for example, let me just pull up because I have like, for example, the reserve consultants. So the reserve consultants, this is the local company. They're in Edmonds. So they're, they're right down the road. They're, one thing that I really like is when someone is really easy to get a hold of them, if you can call them and you can talk to someone like quickly, and that seems to really be the case with them. With other type firms, not just reserve studies, but any other types of firms, sometimes when you call one and you're kind of at the mercy of when they'll finally call you back or something, but that has never been the case with reserve consultants, because I've talked to them, I think about 3 different times down there. But so they, like just maybe some quick highlights. So they've done anywhere from like HOAs that have 10 units to 1,500 units. They've actually, they also did Semiahmoo Resort, Desert Air in Central Washington. They said that basically the HOAs that they've done reserve studies for, like all the components that we have doesn't surprise them. They've encountered all the components and road structures and stuff. So it wouldn't be anything new to them. They've done bigger associations with golf course as well. With them, now in terms of like timing, it's obviously for me a big question would be, when can you finish this thing and get us like a draft? And so basically, timing for all three of these with reserve consultants, if everything went really well and they were able to talk to everyone, like they would like to come in, which is great, to talk to. Well, they'll all show up, but they were specifically talking about, really talking to department heads and stuff to figure out the assets, like Tyler and Mike, obviously now. But so like if everything went well for reserve consultants, they were anticipated they'd get us first draft, approximately by around the end of, maybe the end of July, possibly the end of August, if it really started taking more time. With Global Solutions, so what they said is, they said once we get their completed questionnaire back, then it would take them about 90 days until they got a first draft out to us. Smart Property, they said that once we got their completed questionnaire back, it'd take about approximately 8 weeks to give us a draft back. So those would be that's something to consider in terms of the timeline of when we would get the drafts back. Both Global Solutions and Smart Property have done, they have experience doing very large homeowner associations as well, like large ones with extensive road structures. And like Smart Property said that they audited large HOAs like in Arizona with $86 million budgets and capital budgets, and I assume that was a capital budget, 86 million, which is a lot. Operating budget 27 million, I think they said for that. But or Canyon Lake in California, $27 million total budget. But and they'll, I believe they all have architects, like on staff as well, to like assist them with doing their reserve studies. In terms of Global Solutions is in Florida, as you can imagine, Florida, they have some big HOAs down there. Smart Property is in San Diego. And like I said, Reserve Consultants is the most local in Edmonds. So that's, that's obviously a benefit to have a local company like that. Now, in terms of price, of course, it's on this board of directors memo, but Reserve Consultants, now this is just for a level one, that's it. So 11,300 for level one. And level one, like, which I confirm with them, that's a fresh start, that's starting from scratch. It's not just taking it to level 3, obviously, and working with that. Now, Global Solutions, 11,875, Smart Property, 9,000 for their reserve study. Then obviously they have like different tiers. If you go like with a multi-year, each one of them has like a different tier type as well. to where it becomes a little more cost effective if you lock in, like a level 1, then a couple level 3s, or Global Solutions in their 3-year package. It was I believe a level 1, then a level 3, then a level 2 actually. 1, 2, like in terms of over the 3-year period as well. Matter of fact, I have these. I'll just tell you real quickly for Global Solutions. It looks like if you did like an option 2, which they call a clear vision package, so it's about 26,125, and that's the one that includes full level 1, then followed up by the next year at the level 3. Then it looks like it's going to be followed up the 3rd year with a level 2 site visit. In terms of reserve consultants, it was 11,300, like I said, for the first one, level 1, and then the level 3 updates. So of course we get do a level 3 update for the next 2 years, $4,000 a piece for that. So then you're at 19,300 for like a 3-year situation for reserve consultants. With Smart Property, it's basically $9,000 for the level 1, and then it would be 4,320 for each for the next couple of years, which would give us the level 3s after that. So then so basically for the same setup with Smart Property would be about 17,640 for a level 1, then followed up by 2 level 3s. So I think the biggest things to consider would be like the timing of it, like how quickly you want it. Now, obviously, we do have a budget season that, that's why we're doing this, going into the budget. So reserve consultants, so that will take longer than the other 2 firms. So it looks like you're looking at, if we got going with this and you went with them, we could be looking at the end of July, possibly at the end of August, just depending on how well things go to get the first draft back, versus Global Solutions would take about 3 months. And then Smart Property, they claim they could do it in about 2 months. So those would be the real considerations. And then in terms of whether or not it's really important to go with someone local, or if you're comfortable with going with a national firm, but they all seem to have pretty good experience.
Okay, Kim?
So I was going to ask a similar question as Sonia, just, do you know like the reputations of any of them, and which one do you recommend based on, because, for me, I'm looking at staff input for recommendations.
Yeah, of course. Now, for me, there's always a kind of a tendency to want to go with the local firm, the firm that's right down the road. They're in Edmonds. They're incredibly easy to get a hold of, like very quickly. They would have more of I think they would clearly have more of a personal touch in terms of, they would send a couple of their consultants up, and I believe the 2 that would come up would be basically partner level. I think like it's a smaller firm, of course. It's like, a handful of people versus like a large firm like Global Solutions or Smart Property, but it would have more of a personalized feel to it. We would be a really good client for them, obviously, in terms of being Sudden Valley. This is where we would be a really good pickup for them. So I think they would give us really good attention. Global Solutions, with them, I guess with reserve consultants, the only possible consideration would be the time on getting the report. Like if we're okay with getting possibly a first draft back at the end of August, possibly, or sometime in early August, end of August, then if everyone's okay with that, then reserve consultants would be great, I think. If the time thing is more of an issue, which it could be, then possibly Global Solutions partners would.
But don't we need this information for our budgeting
Yes,
process? So
we do.
the
Yeah.
one that would deliver it in August would be too late for that, right?
It could be too late. Yes, it's
Just-
really pushing that.
Just to clarify that, Joel, their proposal says their timeline is 4 to 8 weeks for reserve consultants.
Yeah, but actually, when I followed up with them, talking to them on the phone, we were painting a picture of, the reality of, like everything that would need to be done and so on and so forth. And the partner was thinking, well, maybe it would actually push it out to realistically July or August.
Doesn't sound like it would work
Do you? Yeah.
time-wise.
Now, I mean, if let's just say we got a draft back the end of July, I think that could work. Meaning like, in terms of like, we could go into the budget season or we could go into the budget presentation, even if we had to, we could do the operation part and kind of follow up at the next meeting with the capital part, possibly, like if it came down to it. Like that is, because like the board won't vote on the budget anyways until, obviously it's pushing it, but early September, is when they'll vote on the budget. So it's like, I mean, like it could work. I mean, what do you think about that, AJ, in terms of like that kind of timing?
So just real quick, since I know Sandy's hand is up,
Oh,
and
yeah.
I'm just wondering, there's like probably a couple more questions before we get into that part too, if that's okay with everybody.
Sure, yeah.
Sandy, yeah, if you want to go ahead.
Yeah, 3 quick questions because I don't even know what this financial instrument is. But in my field, I would ask the question, is there more value to being on site than filling out a questionnaire with this kind of instrument? Is there a big difference in the result?
Oh, well, yeah, when it comes to the questionnaire, I won't be able to get out of that with any of them. So meaning like, we'll have to fill out a questionnaire first. So they'll send a questionnaire first, I'll fill it out, then I'll send it back to them. Then they kind of use that as their battle plan, like when they come out and start looking at the capital assets.
Right, but sometimes it's important to actually see something versus just write down
Oh, yeah, yeah.
what it
I mean, like,
was.
yeah, like all of them will probably pretty much follow the same sort of process where it'll start out with like a high level questionnaire. Then they'll use that in their planning stage and then they'll
Okay.
actually show up on site to
Okay.
like look at everything. Yeah.
Okay.
And then, and they won't just show up on site and look at stuff. They'll talk to people. So they'll talk to me, they'll talk to Brian, they'll talk to Tyler, they will talk to Mike or whomever they need to.
So is there a rating, like a Better Business Bureau for this kind of financial instrument to have an understanding of how other sites have rated them?
Well, like one thing that, of course, I always look into and inquire about, and all 3 of them have it, is they're all reserve study certified professionals. It's
Okay.
kind of like being like a certified, like a
Kind of
licensed lawyer or a CPA or something.
So it's
Yeah.
an equalizer. And the
Right.
only other thing is that if the local one, if we would be such a great client for them, then maybe they could get it done a little faster to meet our needs. That would be my only
Yeah, I mean,
comment.
yeah, it might not be out of the realm of possibility. Yes, you're right. In terms of if everything goes well, like I think, maybe they could possibly get a draft in here the end of July. Like
Okay,
that's
thank you.
not out of the realm of possibility.
Just to clarify, Sandy, so you understand what the reserve study is. So it's we are required by law under WICOA to do these yearly. And what it is it's all of our infrastructure. So here's the dance barn, and it will list out all of those major components and their lifespans. And put costs to them. And so it's a capital planning document essentially to aid in our capital planning, and it uses industry standards for life cycles, and they usually use like databases for costing things and things like that. But basically it'll like, okay, it's like, here's the dance barn, you got siding, you got roofing, you got windows, you got door, you got plumbing, inside the dance barn, you got a kitchen with this equipment, and it lists all those components of those buildings, and then it also dives into each of our pieces of equipment. So like we just approved some new golf equipment, like that's all that stuff is shown, all the vehicles that we own, all that type of thing is all listed in this document. And you can see our previous reserve studies on the website. And yeah, basically it just is an instrument to help us know, like, we're gonna likely need to be spending, X amount of dollars during these rough timeframes on these major components of things. And I believe it's like 1% of your annual budget. Things have to cost like over 1% of your annual budget or something like that is what the state law says to be included in the reserve study.
Okay, thank you for another onboarding lesson.
And one of the reasons why, and I've been pushing for this since last year, but we ran out of time last year because we need these for the budgeting, is doing a brand new one. Because when you look at our old ones, you'll see one building, you'll see another building, yet they don't seem to have all the same components, even though each of them have siding, each of them have roofing, and they're like labeled in different ways, and it's very inconsistent, and it's not very conducive of actually being able to do proper planning. And so, we do need to do a new one from scratch to make sure we capture every component and we're consistent from building to building. Obviously, not all of our buildings have like a kitchen in them, so some things may be slightly different, but there are general components that are part of every building, yet on our ones that we have now don't necessarily reflect that. Sonia, and then Nancy.
Yeah, well, and just to expand on that, I think I mentioned this before, but there have been buildings on the previous reserve studies that do not even exist. There was $14 million of buildings that were never built. And this is a budgeting and planning tool. It impacts how much our dues are based on our expectation of how much we're going to spend on those buildings. So it's important they're correct. But the other thing that we ran into this year or last year with the flooding is it became painfully obvious that some things were also way under, like the golf course bridge that is $360,000 is actually, it was $9,000. It was listed as replacement value of $9,000. Just a standard across the board. Most of those bridges out there were like that. And but what I was going to say, I actually looked up reviews. I couldn't find reviews for their clients, but I found employee reviews. There's what I did see is with the local company, it seems to be that the employees are saying that business is really inconsistent. I think it's a really small company, which is a little worrisome to me. They've got like 4 stars from 28 employees on the on Global Solutions, Global Partners. And the other thing about Global Solutions is that they have a lot of experience with nonprofits and commercial businesses. And we're kind of a little bit of a combination of those things. So I'm just throwing that bit of information out there too. I don't know any of these companies either, but that's the information I found.
Nancy?
Yeah, I was interested in your timing. We need to get the ballot package out September 9th.
Yeah.
So,
Yeah, that's a fair point, Nancy, what you're bringing up with that.
okay.
Yeah. I mean, it is a concern of mine too. I mean, yeah.
I'll just say, I looked into the companies a little bit myself, and as an engineer who does a lot of this type of thing for my job, I always tend to go to, what are these people's credentials, because a lot of the previous company that we use, they just have this CAI certification, and they're like, you know, kind of like a financial company who just, you know, kind of punches numbers. They use an online database to cost things and stuff like that. So I'm like curious as to, like, you know, these people who are in charge of these businesses, like what are their credentials? And I did like the local company, their lead executive or their, you know, top person is an architect, you know, which means they do, and they have been for 20 years. You know, they have that degree. You know, they didn't just go, you know, pay $1,500 for some CAI certificate and become a reserve specialist. Like, they have a bachelor's degree in architecture. You know, I think that type of thing is, you know, they bring some real world experience in costing, you know, projects and stuff like that. So maybe we could avoid the whole $9,000 bridge that actually costs $300,000 some dollars. That's one thing I worry about with the Florida company is, well, Florida is a completely different world of what things cost and the requirements that are required to do certain projects. And so, like, do they understand all of the red tape that Washington State, you know, imparts and Whatcom County imparts on, you know, projects in the watershed and all that type of thing? That was one concern I have with them. You know, at least California is right there with us with the red tape and expensive, you know, and cost of living and cost of goods and things like that. It is a bummer, I guess, to hear that reserve consultant didn't actually put an appropriate timeline into their proposal. But when you do look at like a 3-year thing, the global solutions company is the most expensive if we were to move forward with trying to bring someone on for a 3-year cycle, basically, which is usually how we do the auditor and stuff too. And then the smart company was the cheapest and the local company was in the middle. I do have one question, Joel, on the RCL proposal. There is a additional service for $300 called a reserve projection worksheet. Is that something that you feel like we need, or is that something that you have typically put together? Or I'm not exactly sure what a reserve projection worksheet is in comparison to what we would get in the reserve study.
Like, they basically have kind of some add-on type things, and most of them do too, that to where like they could give us more detailed information on cost component units, basically expanding on what they would give us anyways. What they, you know, that bid, they called it the state minimum, but it's going to be what the other two companies are doing too, meaning giving us what the law requires for the reserve company. But they do have other reports that they can do if we wanted to pay for it, to where it could be a lot more detailed. Of course, now we didn't even get into what those reports could be at that point, because we were focused on how quickly could you get us a level 1 reserve study to begin with. So meaning like the other reports would take additional time that would really push us kind of beyond like our needs in terms of for the budget. So we didn't spend much more time discussing those kind of options.
So it sounds like there's upcharge opportunities.
Oh, yes,
built in. And then
looks like each of them are willing to come and do a presentation to the board, which I think is important, and
yeah,
we definitely want that. And
I mean, the thing is, I mean, like AJ said, I mean, of course, my heart is kind of set on reserve consultants. It's just, the only thing would be the time on it.
is it possible to set up a presentation for them then to come to the board meeting so we can hear them out? Or check with ones to see who can get us the report the earliest, and then possibly have that firm make a presentation, because the timeliness of it is really important for the budgeting process.
I think that's not what you meant, right? About them coming and making a presentation. You're not talking about presentation just to on the
No, I
bid.
meant like when they finish a draft reserve study, they'll come
Oh, to
to
finish
us, like just
Yeah.
like the auditor does when they finish the audit. Because basically all these people bake in, like they'll do a draft, you get one comment back, you get one package of comments back to them. If Joel or any of the staff thinks, oh, we're missing something, oh, this piece of equipment didn't get on there, or something like that. So we'll have to package our comments up to Joel, and then he'll have to, ask them to make any revisions that we think are needed potentially, if things are missing or anything like that. That's
Yeah.
kind of the presentation I was.
And yeah, revisions are always made, whether it's reserve study or audited financial statements or tax return. Like I always end up making a bunch of revisions, edits to it.
So one question I have, Joel, with one thing I did like with the smart property one is they actually bring an they say they're bringing an engineer to do a physical analysis, which I like that more than an architecture, or an architect. Maybe I'm biased because I'm an engineer, but engineers, architects usually deal with aesthetics and, building design kind of thing. And engineers get more into the weeds on like cost estimating and things like that. The one thing on the smart property is, so it appears to me from the proposal that like they'll come out, they'll do this initial one, but then moving forward, we're able to do our own updates for the following years? Is that how that works? Is that what it's saying to us?
Actually, the neat thing about the smart property software is, at first, I thought, well, what is this software thing? But actually talking to the reserve study guy, it actually sounds like pretty kind of handy software in terms of we get access to that software, and then basically it's kind of like, for example, like with Schwint, like when I do a level 3 update, then I tell them, here are all the additions, deletions, whatever, and then they make the changes, they send me the report back, and then, well, no, update this or change this or whatever. But with the software access, it's kind of like I myself would go in there and make changes to it, and then they would have a reserve study specialist on their end who would review it, and then so basically they're still stamping that report the same as any other reserve study firm would do. But the neat thing about that software, throughout at any time throughout the year, we could go on there and we could do like what if scenarios, like go on there and what if we move this barn aid out 10 years or whatever, and it would, in a sense, essentially recast kind of a reserve study for us, like what this would look like, how would it actually like affect like a new set of tables in the reserve study. I mean, of course, we do that anyways, like through Excel, but this would be kind of more automated. So, I mean, it could be like a budget planning tool, like throughout the year, like at any time someone said, hey, we want to do the component units. Let's kind of like what we did with the last audit. We'll move the component units in and push the barn rebuild out. We could actually do that in the software, and it would recast kind of like the funding tables and everything.
And that wouldn't impact us in any way as far as the compliance with RCWs?
No, yeah, because like it's a reserve study specialist on their end who will actually review it just the same as like any other reserve study company did or would. And then they would stamp it, like in data with their stamp of approval. Then it would be the same legal report as having like another firm doing the level 3 update.
When is the latest we need to make this decision? I feel like I still want to look. I didn't look them up. I'm just submitting for myself, and I would like to do a little bit more research on them. That's just me.
So the next board meeting, is next week, but if we go much further out. We're not
Not
gonna
next
hit
week.
the,
2 weeks.
Yeah.
is it in 2 weeks? God dang it.
Thursday is the 31st, so
Oh, well,
it's the
2 weeks
14th.
is pushing us.
Mhm.
We probably, none of them are gonna come in for budget if there's a very strong chance. I mean, we're right at that limit pretty much right now.
I mean, budget wise, if you went with Global Solutions or Smart Property, I mean, we'd be fine time wise for the budget if we got on it like quickly. Reserve consultants, I mean, because I really like reserve consultants, but of course with their current workload and stuff like that, we could potentially be looking at the end of August, maybe the end of July if everything went really well.
One concern I had with the smart property proposal was it appears to be subscription based. So
Yeah, the software
and
component
it
of it.
continues to auto renew, like companies like to do. So that's going to have to be monitored to ensure that that continues,
Oh, right.
to come back before the board,
Yeah.
in a timely manner, because it says it has to be done 30 days before auto renew to be able to cancel.
Right.
So you're basically signing like almost a perpetual contract to some
Yeah.
extent, but it's a subscription.
Yeah.
But they are also the cheapest, and they do provide some of those other, real-time benefits where we can use their program to make adjustments and do cost analysis type exercises and things like that, which, could be beneficial.
Yeah, because at first, when I first saw the smart property, and then I thought software, like, well, what is this? But then when he was telling me about how you could go on and change, like, move something out 5 years or whatever, and it would recast basically the report. Well, I mean, of course, we do that in Excel, but that would be really handy if the report did that.
So are we narrow it down to the two that can come in and for budget season? Are we in agreement on that?
I mean, ultimately, it probably would be less stress in terms of like the timing of everything, like what Nancy pointed out. Because yeah, she's right. The budget does need to go out early September.
Okay, so are we in agreement that we narrowed it? We're gonna stick with the two that we know can come in for budget season? Is that what we're doing? Trying to move the conversation along here.
Really, you want to go to bed, Sonia?
My butt is really actually starting to hurt here, and I haven't had dinner. So I know. So I don't know. How do we want to do this?
Well, it makes sense to narrow it down to the two that can actually get it in on time, because that's obviously a factor.
Mm-hmm.
Okay, we just want to like just take like an informal vote and see how far off we are. Is that okay? AJ, maybe like who all wants global solutions, who all wants the other one, whatever the name of it is.
Smart property, is it?
Yeah.
Ours?
I guess the only other option would be if you wanted to write up a motion that said, we'll go with reserve consultants. If, I reach out to them and they say they can do it by a certain time, if not, then we'll go with one of the others. But, I mean, just to throw that option out there.
You should have done that before the board meeting.
That makes me a little nervous. I just have to say, because people will sometimes say things to make a sale, and I appreciate that you like them, Joel, and I believe that they probably, there's reasons that are valid for that. But I'm also really worried if they say they can do something and then they oversell it and they're late, then we have to figure out how to manage that.
Yeah, that's a valid point also.
It would not be easy or cheap.
Yeah.
Okay, so here, I'll help. I would like to vote for global solutions. Am I the only person that wants to do that? Because I'm hearing a lot of leaning the other way.
That one's the most expensive one, right? And does that one fall in line with our budget for the
Yeah,
item?
it's fine. It'll fall in line with the budget. It's a larger company. I'm not gonna, I'm just trying to see where everybody is so we can maybe, is it just me that's,
You know,
leaning in
one
that
good thing about
direction?
Global Solutions too is, I mean, they have done really large clients, and they also seem to be incredibly easy to get a hold of whenever I've called them. And that is a factor, you know, especially when we get down to it with budget season and then we want last minute changes and stuff. If you can get a hold of someone quickly, that really helps.
Well, if it's within our budget and they seem like have good customer service and they meet our timeline, I would support that vendor.
Is that the one you're leaning?
I'm
to?
just trying to get like I was just suggesting to try to see where we were going here. We might just keep talking in circles, and the majority of people already know that they want one or the other. I was just trying to save us time. That's all.
We
Sandy
still have
has her
another
hand
round
up.
of property owner comments as well to do, so we
Yeah.
need to move the conversation forward. Sandy has
So
hand.
the smart property one, if it is of value to have the business tool to tweak this along the way through the year, then that's the only one that seems to have that software option. So if something comes in and there's a tornado and 3 bridges go out and you have to fix them, you need to go quick back into this instrument and tweak other things that you won't be doing. So it's just, you know, in healthcare, we're moving the business intelligence tools in the hands of the people that are on site has become more critical. And I don't know if in this case it's important or not. That would be my leaning toward the smart property one. Plus they're not in Florida. Florida understands flooding and that, but I'm new here and I don't understand the weather and the things that can happen. That may be of importance.
Yeah, I mean, that the software tool could come in handy, like especially during budget season, like next year's budget season, to quickly go in and update software and have it recast potentially reserve study. So that's a good point also. Doesn't make it easier, but it's in terms of the decision, but it's a good point.
Well, I decided to defer to you and AJ. How about that?
Okay, I guess we'll go with reserve consultants. No, I'm just kidding. I like their lobbying ability. I'm just kidding.
Would people feel good since it's really late? Would people, I mean, do we have time to maybe all agree to research global solutions and smart property and come with a decision for the next board meeting?
Well, we were supposed to do that for this board meeting.
Sorry.
It was all part of the running short of time.
Global Solutions is the local company, right there in the Northwest.
No, actually, they're in Florida. Global.
Oh, I just looked them up though. They look like they were, maybe I got the wrong. Oh, okay.
What was it? Reserve consultants, maybe.
Maybe
They're
it was
in
the other
Edmond.
one. Global Solutions Group. Right.
Global.
Yeah.
Did you look up Global Solutions Partners?
Oh yeah, wrong global. I'm sorry. Yeah. All right. I'd say go with the local group.
But they
They
can't.
they
meet the
can't do it in
deadline.
time.
Oh, but so there's like,
So, but smart properties is at least on this coast and be slightly more
Okay, I'm vote for
understanding
that.
of our weather. And I mean, I know they're Florida or they're California,
can't
but it's
do
still
it in
more
time.
West Coast.
Oh, actually, smart property. They claim to be able to do it the quickest of all 3 of them.
Well, that's something.
I kind of lean towards smart property myself. Just I like the idea of an engineer coming in to do a physical analysis of our association property and analyzing all the physical components. I don't know that I see that in Global Solutions.
Okay,
I see
I'm
more
ready.
of that, just that reserve specialist credential through CAI that they bring in to do that work.
So smart property is the least expensive. It has the engineer, it has the software tool where we can modify things, and they can also get it done on time.
Yes, yes, because they said,
Vote.
yeah, he said
Call
8
it,
weeks.
call it.
And that
Call the
makes sense.
question.
They
Let's do
have
it.
my vote. That seems like all the things that we need right
Yeah.
there.
What would be anybody have a downside with smart property?
Joel, the smart property thing says up to 360 components and $1 each for additional above that. Do you know if we have more than 360 components?
I'd have to, you know,
I'm thinking we don't, but
yeah,
What do you mean by components?
well, each item that's listed as like,
yeah.
you know, a major component. is,
A
you
building,
know,
a
like,
bridge.
Mhm.
you know, here's a bridge, here's this vehicle, here's the siding. Each of those are a component.
So I guess the big question would be, even with all those extra components, since they are the lowest overall
Yeah,
proposal
right.
currently, even with all the extra components, they'd probably still come in lower.
Yeah,
My guess, I don't know.
yeah. I mean, because even if we had double 360, it'd be another $360, like to Keith's point. And they're 9,000 anyways, like the lowest.
Okay, let's call the question.
Yeah, I feel good about smart property based on what I've read and seen. They look pretty reputable and showcase their services very well. So yeah.
And they have good reviews.
Call it.
So I would make a motion that the board of directors, or hold on one sec, Joel, this is comes out of ops, right?
Yeah,
Is where we have it budgeted, right?
we do. Yes.
I would make a proposal that the board of directors execute the agreement or proposal with Smart Property at a cost of $9,000 out of the operations budget.
Now, by the way, did you want like a 3-year thing or a 1-year thing for now, or?
Well, it sounds like we don't really get that choice. We have to, it's a subscription.
Meaning,
So once we sign up, we have to cancel it, or we are going to keep paying for it, just like our maintenance connection software that never got used.
But what you're saying is,
yeah, if you want me to cancel it at the end of the year or at the end of.
so we could do it at 1 year.
I think you're going to need to put it on your schedule that you bring it back before the board each year, you know, in a specific time period before that, you know, so
right.
We have to cancel 30 days. So 60 days before a renew period, you need to bring it back for the board for that discussion.
So he's saying, so 1 year he's asking, do you want to do a 1 year contract? You want to do a 3-year contract?
There isn't a contract.
I
is
know,
what I'm
but
saying.
well, you're just saying like
It's a
like we're just gonna
subscription.
I understand, but we can put a limit is what Joel is asking. When you read the motion, just say for a 1 year term and then he'll have to bring it back before the board like that. We're not going to do the full cycle of level 1, level 2, level 3 with that same company. We'll revisit it next year. Is that what you're saying?
Well, I think we should, I think it needs to be revisited every year. The board needs to ensure, you know, that we deal with the reserve study each year.
Okay.
Or I guess, could you say after 3 years, but reviewed annually? Would that make any difference?
I guess I don't see why we need to put a years on it because it's a subscription. It's not actually a contract.
Yeah.
So
I know he doesn't want to have to search for new reserve study people every time. But it's like he's saying,
yeah,
up to
I guess
3 years.
Maybe kind of like with the audit, you know, where I mean, we still bring it back in front of the board every single year, but
yeah, I think that's basically what needs to happen. This is going to need to be brought back for the board each year.
Yeah.
So you word it as up to 3 years
No.
to be revisited by the board
Annually.
annually.
Yeah, meaning like you still
I don't
Oh,
see why you would do that because you're not signing an agreement for
Because what
3
he's
years.
saying is when he brings it back next year, he's got to bring back a whole 3 new bids when he comes back next year, if you don't tell him to word it that way. If you don't word it that way, he's bringing back 3, he has to come out with 3 bids.
You guys, Keith's hand up. Is up. What is it? 12 o'clock?
You're on mute, Keith.
I'm sorry. Thank you, Kim. I didn't know, AJ, if you needed to ask for any additional monies for the component part of this thing. So above the 9,000 if you wanted to. So it looks like you're coming in on budget and not, not asking for more later or something. Just a thought. I don't know.
I agree with Keith. It's probably silly in the amount that it comes out to, but it would be good to have a little bit of a contingency.
So make it for the 3 years up to what, 12,000 if that's in budget.
Yeah, that sounds fine.
Be voted on and to be reconsidered annually.
Yeah.
Okay. I don't know where I'm at anymore.
Motion to approve whatever the name of that company
Farm
is.
property.
Yep.
Our profit.
Yep.
You're
For,
still in Sun Valley.
yeah. For up to 3 years, to be reviewed by the board annually as our new reserve study specialist.
Yeah.
Not to
and-
exceed $12,000.
Yeah.
That a fair amount, Joel?
Yeah.
With extra
Yeah, I
admin?
think that would be good.
Second, I guess.
I mean, of course, I'm just looking at the SURF spreadsheet.
Yes.
Looks like it goes out to about 287 rows, for SURF alone. So 12,000 should be fine.
That was seconded, right?
Yeah.
All right, I'll call the, any other discussion on it? We'll call the question to contract with Smart Property. All those in favor?
Aye.
All right, that passes. All right, Joel, thank you. We'll
Okay.
get on that ASAP then, so we can
Yeah.
get that going.
Yeah, thank you.
Thanks, Joel.
Yeah, thanks.
All right, it's late. I know we added to the agenda talking about transitioning to in-person meetings. This is what I would like to propose is I'd like Dan and staff, obviously John's gonna need to be included to maybe come back to the board with what, or come up with, what are the challenges of moving back to in-person meetings and bringing back like some sort of, I don't know. Sorry, my brain is shutting down at this point. Basically, if, coming back with some information from John about, what all is he going to need to deal with to be able to be prepared to make that transition, because staff's got work to do to set that stuff up, and all that type of thing. What's the state of our equipment that we used to use for all of that stuff? That type of thing. And maybe next meeting we could have a more comprehensive discussion on this when it's not 11:30 at night.
Probably a
Is
good
it-
idea at this time of night.
It would be good to know from John what he sees are the challenges with doing that. and
Okay.
so that we can make a more, informed decision on what that transition timeline looks like. I don't want to just be like, oh, next meeting we're in person, and now John has this other work that he has scheduled out over the next couple weeks and now has to try to insert all this additional stuff in there.
Sure.
What do you think about that, Dan?
I think that sounds fine. So I'll do that. I think I'll also reach out to the health department just to see sort of what their thoughts are for why you might do one or the other, just because I do know that there's, there are some concerns for some folks that are vulnerable. So mostly make sure that we provide for everybody in the community to be able to attend, whichever way we do it. But I think that's
like a good plan. All right.
okay.
Well, let's do that then. All right. Well, then the last item then is the last round of property owner comments.
Yes, and we've got 7 people still with us, and I do have a hand raised from Diane. I'm going to go ahead and bring you on over here, Diane. Go ahead and unmute when you're ready.
Can you hear me okay?
Hear you great.
I'm what I want to know is more about the complaint process, and wondering if there's someone on the board who's familiar with the complaint process, actually been through it, that I could talk to. Instead of, it's so late tonight, instead of getting an explanation now, maybe there's someone I could contact.
What's the complaint regarding?
Well, I don't want to get into the details, and so is it possible to just talk to somebody about the process in general?
Sure, if it just, the reason I asked is if it was ACC, there's a certain process. You should reach out to the general manager though, and he can help you with that.
Oh, okay. I wasn't sure if that was appropriate, so, okay.
No, that's fine.
I'll do that. And I know he's got a question answered tomorrow, so maybe I'll ask him then. All right,
Yeah.
thank you.
Yeah. Okay, thank you.
All right, thank you, Diane.
Thanks, Jan.
It's always good to run the complaints through administration so that can be logged and dealt with.
Okay, anybody else for last round of property owners comments tonight?
And then that, Dan, if your email is dan.pike@sunvalley.com, correct?
You're on mute, Dan.
Yes, that was my correct email address, and the phone number is 734-6430. 360. That's my desk.
All right, anybody else for property owners comments? I don't think so.
Okay. Well, thanks to everyone for hanging in there. Oh, wait, there's a hand up.
Yep, we got a hand that snuck right in here.
Good.
So the initials KSS here. In chat, they put in Christy, I believe. I'll go ahead and bring you on over, and you can unmute when you're ready.
Okay. Yeah, I put that in chat. My question goes back in the February meeting, February 10th, you guys were discussing the events, and then you tabled that discussion. And I'm not sure when it's going to be coming up again on events that are possibly going to be held. As somebody who has a business who does a lot of events at a lot of events, I'm already booking into September. So if we're going to try to put on events that include vendors, that window's closing very quickly. So I don't know when that's going to be coming back up at the board meeting. So just wanted to let you guys know that that window's kind of closing for summer events, I guess, would be my thing.
Yeah, we're board's waiting on more information from staff at this point.
Okay.
All right. Thank you very much.
Thank you.
Okay. Anybody else? Just use raise hand in Zoom.
Oh my God, no, I keep wanting to hit that red button, so.
All right, let's call it. They've had two people to raise their hands, so it's late. Nobody else wants to sit here anymore, even them. They can admit to themselves they don't want to be here anymore either, too. I think.
That's
Thank
too
you,
bad we're not
guys.
at the dance barn now, right?
Motion to adjourn.
Second. All right, everyone have a good night.
Thanks,
Good night,
everybody.
everybody.
Bye.
Right.